All right, we're back and we are moving on. And in today's class, we are going to talk about something that I am passionate about. I'm passionate about all this. What can I say? But we are going to talk about home loans and mortgages. Folks, well, stop. Home loans and mortgages. Mortgages are definitely regulated a little bit different. So this isn't a self-promotion class. This is an educational class. But anytime I get talking about mortgages, I'm supposed to put my NMLS number on there. That's my company and mine, and a link to my website that has access to the consumer access and all those fun disclosures. So I am Geoff Curtis. Yes, I am a mortgage broker and a real estate broker. And yes, I have an NMLS number and a website. And you can go and look up all those fun disclosures. Okay, let's have some fun. So, folks, mortgages are a class in themselves. Please take my mortgage class. Just take it. It will save you money every single month. And will save you money every single month by teaching you how to get the best mortgage for you. I am never going to guarantee you that I or anybody has the absolute best mortgage. I don't know how you would even define that. Lots of times people want to talk about rates, and rates can be manipulated and skewed. And there's so many bad lenders out there. God, there's some great ones. And I will gladly send you to a great lender. If you don't want to work with me, if you're not in my state, I will find you. I will teach you. I will look at statements with you, and I will prove apples to apples who are better lenders, because the misinformation out there is so incredibly massive. And if you think that you're going to walk into your local bank with those big fancy buildings and they're going to give you the best mortgage, or lots of brokers are going to give you the best option day one, no, that's not how most of them work. The vast majority of them don't. They don't build those big fancy buildings to not charge you. And I got into this, and I am passionate about this. I hope you can feel it. I got into mortgages because I was watching these big veteran companies or these Navy companies that helped out the veterans, and they were terrible loans. Absolutely terrible loans. They pay for that marketing. They pay for all of those cool commercials and those Super Bowl ads and all the stuff they do by charging higher fees. And I can't say that they do on every loan, and I can't say that all of them are that way. I'm just telling you the vast majority of them. I have stood in a house with a potential buyer and her mother and talked about how big banks typically charge too much in fees. Not always, but I have found, at least in my market share, lots of times they charge more than they need to, or more than you can get going other places. And the mom was a vice president at the bank and threw a fit and said that they would get the friends and family rate and it would be great. And I said to her daughter, great, I represent you, I don't represent your mom, and I'm going to send you what my exact terms are. And I did. And she compared it to the friends and family rate, and she went with me, and the mom quit the bank. I hope it wasn't because of that. But folks, I want to prove apples to apples, or I want to teach apples to apples how you get and understand your mortgage, because it's not that easy. It's not. And they can mislead you and give teaser rates and do all these things they're not supposed to do, but they do it all the time, and I want to educate you. Okay. I also want you to understand your debt to income ratio. Okay. Your debt to income ratio, and this is not perfect, it's never perfect, but we need to take all of your income, okay, and subtract all of your debts and figure out what it is. So let's say you were making $10,000 a month, and let's say you had $2,000 a month in debt, and that included, sometimes we need to include even debts you're not currently paying on, like maybe it's a 24% no interest, no payments, or it's a student loan that's in deferment. There's all sorts of things that can still count towards your debt to income ratio. So if you're making $10,000 and you have $2,000 worth of debt, your debt to income ratio right now is at 20%. Our goal is to keep all of your debt to income ratios at 40% or lower. That doesn't mean that there's not products and ways and all that to go over it, but that car loan you may have, or all those loans, if we're eating up your debt to income ratio, that is a problem. Okay? Also, I touched on it. Banks and mortgage brokers are two different things. They offer mortgages. They offer government-backed, conventional, and FHA and VA and RD loans. That's right. But they are supervised and regulated under two completely different entities, and you need to understand that, okay? I'm not saying one is better than the other. Banks, honestly, if they wanted to absolutely destroy my rate and my loan, they have more control to do that than I do to absolutely destroy something that a bank does. They have more flexibility. They can make more rules. They can do non-qualified or this is advanced stuff. They can hold them on a portfolio. Like, they can do all sorts of things that I can't do. But typically speaking, those big buildings are not paid for by doing lower than market average loans, typically speaking. And I'll stand by that. Okay? There are some wonderful banks out there. So, you also need to understand how lenders get paid. So, lenders get paid, the vast majority, the most typical way lenders get paid is it's a commission. If you're a broker, banks sometimes are on salary or other things. But how much that mortgage broker is charging you, whether it's 2%, 2.5%, 3%, 1%, whatever it is, it really affects your rate. So if you get a $500,000 mortgage and your broker is charging you 2%, that's $10,000. If they're charging you 3%, that's $15,000. In most situations, that directly affects your rate. And again, you got to take the class. I'm trying to get you to understand there's so much to it, but understanding how your mortgage broker gets paid and what they're charging you can affect your rate. So service matters, closing on time matters, fees matter, but so does broker pay. So I just want to make sure that you understand all that. I also need you right now, and maybe I should have started with this, you need to meet with a lender, okay, or a couple lenders. You need to find somebody you're comfortable with. You need to take the class so that you know what to ask. And we need to figure out what budget you're comfortable with. And you need to know, I do not want my payment, and your payment should include your principal, your interest, your taxes, and your insurance. Doesn't include all of your utilities, but PIT, principal, interest, taxes, and insurance. PITI. Wow. Should flow off my tongue. Okay, this is getting long. We need to know what your budget is, and we need to make sure that you know at what price point will stay within that budget. Hey, I want my budget to be this amount, and therefore, based on current market conditions, I should be looking at $700,000 and under, or $500,000 and under. Do not look over your budget. Don't do it. You're not going to appreciate what you can afford. If you can afford $500,000 and you look at $600,000 houses, you'll never appreciate the $500,000 house. Start at $400,000. Start at $450,000 and slowly work your way up. You are much better to work your way up to find something you like than to start up here and have to come down. You will appreciate and enjoy the house more. So, take the home mortgage class. Understand what your budget is. Now that you understand what your budget is and what you can afford, you can look online. So now we can look at some houses online, but only look within your budget. Okay, wow, that was a lot. This is a long video. We're going to wrap it up right there. There's so much more to mortgages and financing and how it all works. Please reach out to me. I don't care if you have any intention of working with me. I just want to educate you so you don't get sucked into some marketing plan or somebody who claims they're veteran friendly or whatever they are, when in reality there's a much better option for you. All right, we're wrapping it up. We're done with this video.